Okay, so this is a doubt solving lecture on subsidiary books. We have already done one lecture which is on the concept. Now, in this lecture, we will go through some of the pages of the book, and we will also go through some of the solved examples. So we already spoke about what is a subsidiary book and the need for subsidiary books. So your textbook will mention specifically with respect to your examination body what are the answers they are looking for. At the concept level, once you understood the meaning of subsidiary books, then you should be able to read through these and be able to understand and remember these answers. So by and large, it is time saving and economical. There is division of work, there is specialization, there is quick information availability, and there are internal checks. So coming straight to the four types of subsidiary books, that's the cash bank transactions. So we call it the cash book, right? You could have a single column cash book, or you could have a two column cash book, and then you could have bank book. So single column cash book, single column bank book. When you combine both of them together in the same book, it's called a two column cash book. And so these three are pretty much the same, one, two, and three, right? All these are the same. And the next category is petty cash book. Credit transactions, which is for your goods by and large, purchase book, sales book, purchase returns, and sales returns. And the third category on the top section, bill transactions, bills receivable, bills payables, and others is your journal proper. So moving forward, we've already described what is the cash book. So now here we can really look at example, right? The example will give you a better understanding on a practical way, as well as how will it really look in your examination. So we spoke about the two columns on the cash book. We have when, okay, let's just, here is the simple cash book. On the left side, you have debit. On the right side, you have credit. Now, this is the center line here. So all these columns will repeat on both sides. Date, receipts. On the opposite side, it is called payments, because this is the money you have received, debit what comes in. And if it's a receipt, it has a receipt number. And if it is a payment, you make payments and you make people sign the voucher. Whoever has received the money from you is required to sign the voucher as to proof that money has been paid to somebody. So, and when you pay money to somebody, he signs the voucher and he will give you a receipt. So here, this is why you have receipt number on the left hand side, because this is where you have received money. So you will issue a receipt. So you have a receipt book, which is for your own business, and it will have receipt number 1, 2, 3, 4, 5, 6, 7, 8 onwards. Ledger folio, common column. Okay. So now prepare a simple cash book. And this is the date. So cash in hand means on the first day of the month, you already had this much cash in your cash box. Really look at it as a concept. There is a real box. And actually in the olden days, you actually had this aluminum box with like a small suitcase, and you have a lock on it. So the main cashier will have this lock and key with him. Sometimes you have dual controls. There will be two locks on the cash box. So one person alone cannot open the cash box. Two people have to open it. So on the first of the month, when they opened the cash box, there was 2,500 rupees of cash available in the cash box. So how will you record this in your simple cash book? So this is how we will record it in your simple cash book. On it is going to be on the left side, debit or the receipts. So it is money which is already there. So that is going to be 2,500 rupees to balance brought forward. This is how much balance was already there on 1st of March. Now you will start recording these transactions. Whenever you receive money, it will be on the left side, on the debit side. Whenever you pay money, it will be on the right side, on the credit side. So per se, this makes the life very simple. In case of a journal, the visualization has to be done better, but in case of a cash book, it makes it easier. Once a job is easy, your chances of making an error are lesser. So that's a very good thing of subsidiary books. It simplifies the job, and a journal is a little more complicated than a cash book. So cash paid to Suresh. The moment I have paid money to somebody, I know the entry will come on the right hand side. Cash purchase. When I purchase goods, I am paying money. Again, this entry will come on the right hand side. Cash received means the entry will come on the left hand side. Cash sales. Sales means money is coming inside, so entry will come on the left side. Paid carriage. So when you pay money, it is money going out, so it will go on the right hand side. Paid salary, again money paid, so it will come on the right hand side. So you quickly just classify whether these entries will come on the left side or the right side, and then you write them down with the small little bit of the narration and the amount. These columns are practically empty right now. Ledger folio and receipt number, voucher number. In practical environment, you will actually fill in these columns. In fact, it is on the basis of the receipt book that the entries will be made, and on the basis of the voucher numbers, the real physical vouchers. So that becomes the basis on which the entries are made. And in an exam environment, this is left blank. But in a real environment, receipt number, voucher number will never be blank. Ledger folio will be blank till the time you have not yet posted it into the ledgers. So once you do the posting into the ledger, then this will have the page number on it. But when you start making the cash book, this column will be blank. This one will always have a number. So now, yeah, these are fairly easy once you know whether it goes on the left or the right. These are binary decisions, right? You don't have a complex set of multi-dimensional decision to make. So, posting into the cash book is a very, very easy thing. This is, like I said, the simple cash book format, right? And this is very much looks like a ledger. We will talk about ledger in a separate lecture, but left side, right side, left is debit, right is credit. So look at this, and the end of it on the last day of the month, you will say buy balance carried down or carried forward. So you can write down C/D, or you can write down C/F, or you can write down C dot D or C dot F. These are all interchangeably used acronyms. So carried forward is what I like to use. It's how I've memorized it. And the first day of the next month, you will say balance brought forward, brought down. Okay, so that's how you will solve this example. Now, this is another example on the same concept, which is on simple cash book. So take a look at now. Quickly started business with cash means cash came in, so left hand side. So if you see here, it is on the left hand side with this date and with the narration. So it's just like a journal entry. You put the narration after the account name. To and buy. Okay, this is again, you need to note on the left side you always write the word to, and on the right side you write the word buy, which is a little abnormal. If you look at a journal entry, when you use the on the top of the journal entry debit account, you don't write to or buy, and on the credit you write down to. So that's a little confusing, but ignore it. Just need to remember that this is how it is. On the left side, on the debit side, you will always prefix with a to, and on the right hand side, the credit side, you will always prefix with a buy. Okay, so started business with cash, left hand side 1 lakh, deposited cash into the bank, money went out from cash, hard cash, the cash box, look at it as a real box, right? In that box you had 1 lakh rupees, you removed 80,000 rupees, so 80,000 left hand, right hand side, sorry. Purchase stationery, money going out, right hand side. Cash purchases, again money goes out, right hand side. Sold goods for cash 20,000 at 8% trade discount. We'll calculate the amount later, but when you sold goods, you received money, so it is going to be on the left hand side, debit side. Now trade discount means you will not receive 8% of this money. You are saying this is the list price of the product, it is 20,000, but you have given a trade discount, not a cash discount. 8% means 1,600 rupees, so you will receive 1,600 less than 20,000, which is 18,400. So look at the 18,400 to sales. This is got a little up and down. So just correlate this to 18,400. So you will not record 20,000, you will record 18,400. Trade discount is never reflected in the books of accounts. The actual money you received was 18,400. and not 20,000. So you will show 18,400. Paid insurance premium, money goes out, right hand side. Paid cash to Dikshit, so money went out, so right hand side. Okay, so all these entries will come on the right hand side. Now, interestingly, your name of Dikshit will not come. Okay, paid cash to Dikshit, so that in his name will come. But when you purchase goods in cash, it will just come as purchase, name of the person. Over here, if they said cash purchase goods from Dikshit, then Dikshit name won't come. Okay, it will come as purchases alone. When you paid cash to Dikshit, his personal account, the name of Dikshit will come. Let's just go down and see that. They're saying by purchase. This is Dikshit, sorry. Here is the Dikshit account, right? 10,000 being cash paid to Dikshit. Okay. Now, received cash from Saxena, money coming in. So, left hand side to Saxena account, 80,000. Received commission, money comes in. So, left hand side to commission, being commission received, 2,000. Drew for domestic use. Drew for domestic use. That means this is a proprietorship or a partnership, and the owner of the business has taken out money, he's taken out capital. When he takes out his own capital for these petty transactions on a day-to-day basis, it is called drawings. So money goes out of the business, right hand side to buy drawings, 4,000. Sold furniture means money comes in, so 5,000 rupees will come on the left hand side to furniture. So to furniture, being old furniture sold. Paid salary to Ram, so on the right hand side 6,000. Interest received 4,000, so left hand side to interest. So you do all these entries, you add it all up. So the way you do it in cash, you will always have real cash balance. The balance will always be this side, the left side will always be greater than the right hand side. So when you start totaling a cash book, which is for cash, you will always total this first. But remember, when you are totaling such things, you should always have a pencil and an eraser. Never write down these amounts here first directly by pen, because if they are wrong, then it looks very messy. So have a pencil added up, you will reach 209,400. You will add all this up, it will not be 209, it will be 87,000 less. So that is the cash balance. So that is how much money is going to be there in that box if nobody has stolen money. So you will, at the end of the month, you will calculate, you have to have the ledger balance of 87,400 and the real cash in the box has to match. And next day of the first month, to balance brought forward, 87,400. So that's another solved example. Now, third solved example for cash book, cash in hand, left hand side brought forward 37,400. Cash received from Shakti, left hand side 25,000 to Shakti account. Cash purchases, right hand side, buy purchase 25,000 won't come. You got 12% trade discount. TD is trade discount. That means you did not pay 25,000, you paid 12% less than 25,000. So you need to do the calculation, calculate 10, 25, 12% of 25,000, which means that this amount is going to be um, 3,000 rupees, I think. So, right. So it will be 22,000, right? Because you paid only 22,000. Invested in shares, money goes out on the right hand side, buy shares, buy investment in shares or buy shares, whichever is correct. Paid for sundry expenses, money goes out right hand side, buy sundry expenses. Paid life insurance premium. Now, life insurance premium, this will come like this. This is nothing but drawings, because the business is a business and there is not typically, although you can pay key man insurance, but when they don't use the word key man insurance, life insurance is the human beings insurance. The business is a artificial person, so you cannot have life insurance of a non-human being. So this is for the owner of the business. So this is drawings. This should remember, this is a trick question. Once you know it, you will always get the answer right. This will not get recorded as buy life insurance premium. It will get recorded as buy drawings. And the narration will be being life insurance premium paid. So you see here, buy drawings 8,000. So you have to be able to pick up the trick question and get the right answer. Next is receive dividend. Dividend, you should know this is what you receive on shares as a profit which the company declares in which you are an owner. So this is again typically business has invested money in some shares, so that's how you're receiving dividend. Left hand side, to dividend, then pay telephone bill. Right hand side, buy telephone expenses. You won't use the word telephone bill, right? You will, or you could have communication expenses if that's how accounting happens. But this is going as buy telephone bill account. I would rather use the word buy telephone expenses account. Okay, and narration will be said being telephone bill paid. Again, electricity bill, I won't use electricity bill account. I will say electricity expenses account. But that's fine. Both are same. Doesn't matter. Received interest, left hand side to what, right? To interest. Okay. You're receiving it in cash. Someone came and gave you interest in cash. Cash sales. So left hand side, to sales, again 20% trade discount means 5,000 trade discount, so only 20,000 will be received. So if you look here, to sales 20,000. And then the last one is this electricity bill paid 4,500. So two electricity expenses, 4.5. You balance your cash book, right? Left hand side you add up. Pencil is what is to be used, 85,400. Then you will add up all this. Somewhere here you will write it down in pencil, and you will subtract 85,400 from this amount. You will reach 16,900. That is the balance carried forward. Next day of the first month, balance brought forward 16,900. The accountant will open the cash box on 1st of September in the morning when he reaches office, and he is supposed to check the ledger balance. It says 16,900. He will count real currency. He reaches 16,900. That means nobody stole anything. Everything is intact, and all the accounting entries are mathematically correct. No error in maths. So you always try to tally in your accounts. Okay. So that's cash book. Second example. Now there is two column cash book. Two column cash book is, let me just check how is this recording going on here. Okay, yeah, recording is going fine. So two column cash book with cash and bank column. So you will have one column for cash and one column for bank. Okay, so maybe let's see the previous example. Was it? This is also cash only anyway. So we come to the next concept, which is double column cash book, two column cash book. You have one column for cash, one column for bank. So you will put the amount in the respective column. If it was paid by bank, it will be going in the bank column. If it was related to hard currency, then it will be recorded in the cash column. Concept wise, otherwise it is the same absolute ditto. Only one slight difference, that in case of a bank balance, sometimes you can have a negative bank balance. The bank can give you what is called as an overdraft, which means that you have no money in your account. Let's say you have 2,000 rupees in your account, but you have issued a check of 10,000 rupees. So the check will bounce, right? But the bank can give you 8,000 rupees of overdraft, and that is how the check will clear, which means your balance has become negative. So while a cash balance is always positive and will always be on the left hand side, it will be a debit balance, what we call it. But a bank balance in the normal situation is like cash. It will always be a real balance of real money which you have, and it will be on the left hand side. It will be a debit balance, but it is possible that you have a negative cash balance, and negative cash balance means it is exactly opposite of the normal. So it will be on the right hand side, and it will be a credit balance, and you will write down by balance brought forward instead of writing down on the left side to balance brought forward. Right side you will write down by balance brought forward. So that is an exceptional situation possible when you bring in the bank element into the cash book. Cash book and bank book is the same thing. It is all money. So accounting treatment is by and large absolutely ditto same. Now, opening balance, we spoke about this already. When debit balance of bank account, when credit balance we give, check received. Okay, so when you receive a cross check, it will only, the money will come to your bank. It will not come in cash. So Bearer check is given means you can go and get cash. So that is always going to be a cash account debit. Check received and deposited into the bank on the same day. If a check is received and deposited to bank, that means it will impact your bank. It will not impact your cash box. Imagine you have a cash box. Real cash has to be there in that box. Cash received and sorry, check received and dishonored. So you will pass a contra entry. So first you have already. So remember one thing: you pass entries in your books of accounts, especially when you're talking about even a bank transaction. When you deposit a check in the bank, you will already pass an entry in your books of accounts. Okay, so you are assuming that you received the money. So your left hand side of your cash book, double column cash book in the bank column, you will say, I received 10,000 from Amit. So 10,000 will appear there, check deposited. If this check bounces, that means real money did not come to your bank. Now you have already made an entry. You can't cancel an entry. You have to pass an opposite entry, which is called the reversal of the entry. So on the right hand side, you will say being checked by Amit, and you will say being checked dishonored and 10,000. So you are nullifying the original entry. So that is what it is here. Check dishonored, you will pass the opposite entry of what you had passed when you had deposited that entry, that check. Sorry. Check issued means you gave a check to somebody. So it is money going out of your business. Very simple. Check issued dishonored means now you did not realize that you did not have enough balance in your account. You made issued a check. Now the person comes back to you and says, here, please take this check back. It has got dishonored. Or the bank informs you that this check which you had issued has got bounced. So now again, you have to reverse it up. Exactly the opposite entry. When you issued a check, you had made an entry on the right hand side. Now you will make an entry on the left hand side. So that's as simple as that. Cash withdrawn from bank for personal use. So the word cash comes here, but technically it is going to be drawings. So you will not reflect it in the column for cash. You will reflect it in the column for bank, because what was withdrawn was directly withdrawn, uh, and it did not come in the cash box of the business. The owner of the business withdrew it and it went away directly. Bank advices and statements. So when you get the bank statement, you will see that bank has charged you some amount of money, uh, as charges, which you did not know. So when you see the bank statement, you have to record that it's an expense on the right hand side. Sometimes a customer has directly deposited the money into your bank and he forgot to tell you, but you can see that money has come. So again, you will pass an entry for such a transaction and issue a receipt to that customer, right? Interest is received in a bank account. If it's a saving account, you will receive interest. So you will see that when you get the bank statement. Nowadays, this has become redundant. Earlier, you would go to the bank and update a passbook. Later on, you would get at the end of the month, you will get a bank statement. Now you can log into net banking every day. You can see your transactions. So, you actually have to do this on a very, very regular daily, once in 2 days, once in a week basis. So you don't really wait for the end of the month. Otherwise, the volume increases. Interest charged on an overdraft. So again, this is interest charge. So these are entries which the bank has made directly. So you will have two categories of entries which you were not aware of. Some third party deposited money in your account and you see that, and the bank has either given you money or charged you money. So these two types of transactions you will find in your bank statement at the end of the month. Uh, so all these are examples within these two categories. Payment made by bank under standing instructions. So good, that's another concept you need to understand. It's also a standing instruction. You have said that on the 5th of every month, please pay 10,000 rupees to Amit. So, the bank will on their own, give Amit 10,000 rupees on the 5th of every calendar month. So again, you have to account for those transactions because you have not issued, a voucher, right? These are standing instructions. So understand that in the subsidiary books, all the entries are made on the basis on these cash books, either on the basis of a voucher, which is an expense, or on the basis of a receipt, which is money which we have received. So all these receipts and vouchers are what you enter into the cash book. And these are the entries which are going to come. And after that, you will issue the voucher or the receipt. Normally, you will first issue the voucher or the receipt, and then you will make an entry into the subsidiary books. And then you will issue the payment or receive the money in that moment when you're making the voucher or receipt. Okay. Transfer of amount into current account. So this is money transferred from one account to the other. Again, this is like money going in or out. Very simple, very, very simple when you come to example. Contra is something you need to understand. So a contra is when you go to your own bank and you withdraw money or you deposit money. So in case of, that's called a contra. Otherwise, it is nothing. It's very, very simple. If you deposit hard currency cash into your bank, it means that your cash box, right? Always visualize the cash box, a small aluminum box like a suitcase shape, right? Money has gone out from there. So cash will be on the right hand side. And bank is received that money has gone into your bank account. So that will be on the left hand side. So debit, bank, and credit, cash. And if it is the other way around, you went to the bank and withdrew cash, you will withdraw that cash, and where will it go? It will go in your cash box. So debit your cash and money is going out of your bank. So credit money. So right hand side cash and left hand side bank, right? And the words you will use is to contra, by contra, right? Amounts will be on the left and right side. So that's one extra type of transaction. When you see a real example, you'll be able to understand it more easily. So these are examples of contra. Balancing of cash book and bank columns. This is easy, right? Only thing in the bank column, you have to total both the sides. Sometimes if there's an overdraft, the right side will be greater than the left side and it will be a negative balance or overdraft balance. This is not what we're going to go through types of bank accounts. Let us move forward. Illustration. So we can go over this one illustration. Prepare a two-column cash book. Started business with cash. So left-hand side cash column. So left-hand side cash column. This is the cash column, and you will enter it in this column. Cash deposited into Bank of India. So now this is a contra. So you see the ledger folio. There is a C word used, which is contra, which means that there is no ledger in which you will post it. This is from the left side to the right hand side. So what are we saying? You have deposited cash of 25,000. So money has gone, hard currency has gone out. Cash account will be credited on the right hand side, and bank account, this is the bank column. So here you will write down to cash, and over here you will write down by bank. This is one thing we have to remember. So the opposite. So for in the bank, from where did the money come? It came by cash, from cash. And where did the cash go? The cash went to bank. So you will write down bank over here. Okay. So third transaction, cash purchases. So cash goes out, by purchases. Purchase computer. So buy computer. Again, it is saying purchase computer for office use. They're not saying cash or check. They should. A good question will paper setter will write down whether purchase computer in cash or check. I would have assumed it has been purchased in check, but in this example, that's not what it is. They are saying computer in the cash column. Sold goods to Rakesh and received a bearer check. So you received a bearer check means you will get cash. You have to go to the bank and withdraw that cash. So bearer check is an exception. You will always consider that as you received cash. So you will write down to sales being cash made. So sold goods to Rakesh and company and received a bearer check. So this is to be recorded in the cash column. You see here it is cash column. Paid carriage expenses. This will be paid in cash. It is a petty amount, 300. Will go on the right hand side in the cash column. And next is cash withdrawn for personal use. Personal use is drawing. So right hand side by drawings 3000 cash column. And the last transaction in this example, paid rent. So money goes out. So by check. So it will be in the column of bank. It will be by rent in the bank column. 1200 here. And then you balance it. In pencil, you write down the totals on both sides, left side, right side. You subtract it. Luckily, there's real cash, real bank balance here. So carry forward and brought forward. So this is second solved example. Now, from the following transactions related to Sundar. So this is fairly simple. We've done a good amount of examples now already. You should know the left hand side, right hand side concept, debit, credit, which entry will go left and right. We will not So this is bank balance, not mentioned anything, positive amount, left hand side. Cash balance, left hand side, opening balance. Purchase goods means right hand side, and by check means bank column. Sold goods for cash, left hand side, cash column. Purchase machinery by check, right hand side, bank column. Sold goods and received check, deposited the same day. So these are two transactions. This is not one transaction. Okay. So sold goods by check. This is what it is saying. Okay. So it is, and received check. So I think, sorry, it's only one transaction by mistake, right? This was on the left hand side. You will say, let me just see this one moment. 60 sales, yeah, only one single transaction on the left hand side, sales, and that will be the amount over here, 12,000, right? If you had sold goods on credit, it wouldn't appear in the cash book, it will appear in the sales register. Okay, so the fact that what is, it's receive a check and deposit on the sale, you could have deposited it later, that doesn't matter, but as long as you sold goods and you receive the check right away on the same moment of time, then it is cash sales, and it will come on the cash register, and it will come in the column of bank because you receive the money by way of a check. Purchase goods for cash, so right hand side cash column. Purchase stationery and paid by check, right hand side bank column. Check given to Avdut, which means money has gone out, so right hand side and bank column. Cash withdrawn from bank means contra entry. So contra entry means cash withdrawn from bank means cash box will get more money. You will put that money inside the cash box, left hand side cash, right hand side bank column. So we'll just see this contra entry once, left hand side cash 12,000, left hand side cash column, right? That's what I mean. Cash column. If you see, this is the cash column, and right hand side bank column. 12,000 contra C will be written in the ledger folio. Cash paid rent by check, right hand side, and bank column. Paid salary, right hand side. Cash column you will assume here because they've not mentioned, so you can assume cash. That's it. Then you balance it and you carry forward the balance to the next month. So now this is yet another solved example. Third one. Go ahead and do this as practice. These are all fairly easy, fairly simple. Only, two things: left side, right side, debit, credit. It's very simple. You need to practice. That's the important thing. Fourth example, again same thing. If you encounter something new, ask me the questions and I will let you know. So this is another solved example. Please go ahead and solve it. Petty cash book is the next concept, which we will cover in the next lecture. So for now, this is good, and we will do another lecture in which we will do petty cash, and we will then do a separate lecture for purchase and sales register, and with that the subsidiary books will end. So that's it for now, and look forward to the other videos which will give you a concept level understanding for all of these topics for an introduction to accounts as a fresh student into accounting and bookkeeping. Thank you.